Our next guest says this shows things are turning around when it comes to labor. We're joined by Dean Maki. He's chief economist at Barclays Capital and a Bloomberg best for accuracy. Dean, welcome to In Business. You think jobs report is actually brighter than what these numbers show us?
That's right. I do think that this was somewhat better than expectations, both because we had upward revisions to the prior months, and in addition, the unemployment rate not only held the drop of 0.8 over the last 2 months, it fell another 0.1 in February. So when we look at the unemployment rate decline and every other major labor market indicator, it does suggest that payrolls are probably stronger than the current numbers are printing. So we would expect them to be upwardly revised over time.
Upwardly revised over time, but there are those concerns about new job losses at state and local level with government cutbacks. I mean, are we just going to be bouncing around the 9% range for a while?
No, we think that we will continue to fall in the coming months. Certainly, state and local government cutbacks are real. We saw it again today that they are real job losses going on there. But what's happening is the private sector is adding enough jobs to keep that unemployment rate falling. It may not fall at the 0.9 rate of the past 3 months, but we do expect it to fall below 8.5% by the end of the year.
You know, when I talk to people out there at brokerage houses and the like, the one thing that they seem split on is whether employment will bounce back like a rubber band sort of snapping here because productivity has been stretched and employees have been essentially not rewarded for doing that extra work, or whether we'll continue to see this creeping along. How fast of an increase in employment are you expecting from the private sector?
We think that we'll be adding about 200,000 jobs per month this year in total, including the job losses in state and local, so a little bit stronger than that in the private sector.
So that takes us another 3 years to get back to full or normal employment.
Well, we think that natural rate of unemployment has also risen to about 7%.
Okay.
So we don't think it's going to take that long to get there.
Wage income is flat there too. I mean, now we see the price of living going up. That's not a good thing for the consumer.
The reading was flat this month on earnings, but we did have a 0.4 gain last month. I think you want to average through those. Over the past year, we're running 1.7% earnings growth. That's not high, but it's not falling anymore, and we would expect that to be gradually rising as we move forward over time. That's not going to keep up with the energy price increases we're seeing right now. So consumers are going to face some headwinds here from rising energy prices, but wage growth is bottoming out.
So the big question is, are we at, quote unquote, escape velocity? I mean, can the Fed take the booster rockets off and have this momentum continue? What happens after QE2 ends in June?
We do think that the economy is strong enough to be supported even as QE2 ends. QE2 happened recent enough that we don't think that it's really having a major effect on growth right now. It may have the effect in coming months as the lags pass through, but we think that the economy is in a self-sustaining recovery right now.
One place that you are still seeing weakness is housing. You sound fairly optimistic about some of the rest of the consumer picture, but housing, we're still seeing foreclosures. We're not necessarily seeing a rebound in housing prices.
That's right. We're not seeing a rebound in housing prices at this point, and we do expect a bit further decline this year in house prices, mainly because these foreclosures keep rising, and as they enter the market, they put downward pressure on prices. On the other hand, job and income growth are improving, so we see those as largely offsetting. A bit of a decline this year, a bit of a decline in the next couple, or a bit of a rise in the next couple years, but not major movements in either direction.
Dean, thank you very much for giving us your read there.